Alrighty, good morning everybody. You're going to do a quick review here of what happened yesterday and then jump into today's pre-market. Right now we are at a 2-to-1, right? We've got 140,000 in terms of daily volume on the new contract compared to the 70,000 on the old September contract that will be expiring here on Friday. So all of the levels, I sent out the report this morning, all the levels are still based on this older contract. Just understand, and you guys have been here long enough to know that it will take about a week after expiration to start to build those new levels out. What you can technically do is you could take all of our roadmap levels, add 61 to that, and that'll shift them up to be basically where they should be on the new contract. However, I'm still going to go back and scrutinize all that and maybe even add or remove levels on the new contract. So all those levels will slowly come out here over the next 2 weeks. And so just wanted to let you guys know the deal here. We'll do a quick review on the old contract since we still have all our levels here. And then we'll shift this and we'll look at what the predictions are for this morning in terms of the level or in terms of the signals, and then we'll switch the charts over to the new contract because like I said, we now have twice the amount of volume on the new compared with the old. So that 512 tick chart is not going to act the same with half or a third of the volume of the total market. So well, let's go ahead and take a look at that really quickly. If we zoom back to yesterday, market opened again having trouble right off to the tick off of our expected resistance, right? That was the top end of that scaffolding area. And if you were to zoom all the way back to last month, that was, and I'll just show you real quickly here, that was the level that they could not get through for nearly 2 weeks, right? They came into it and failed 6, 7, 8, 9 times in that final test to the tick. Led to the multiple 100-point pullback. We got the bounce out. What do you know? We come up all the way up and we fell right off of it in the pre-market there. And then I warned you yesterday in the pre-market that if they can get through that strong area of resistance, we then are going to come right up into the next extension level from a previous, remember we have these extensions built off previous ratios in the market, and I told you very well, even though it's close, they could come right up in there and have trouble. Sure enough, yesterday that was the high of the day. So that is the level that we failed off of right out of the open there, that level that they could not get through for nearly an entire month, and then pulled back. And what do you know? They gave you a nice beautiful kiss of the 200 here with a very, very strong divergence there right off of the 200. Hey, if you tried the VWAP, you should have known that your risk was probably going to have to come down below the 200. You know, how many times did they come right in and bounce out? So there was a great opportunity to the tick out of the open off the roadmap level. Great opportunity within a tick or two off the 200. And then, what do you know? They come right up to that extension level I just talked about, gave you a bearish divergence right off the high, and that was the high of the day. So there were some really good opportunities there, again, to the tick with risk. We're talking less than 2 points on the S&P, and you could have grabbed 1 or 2 or 3 of those trades. And then it started to become obvious that that was probably a little peak above and fail. When they started to pull back through the VWAP, you got your crossover, and then you got the first tag of the fast moving average. That could have worked out as if you were watching this in real time and seeing that, hey, we just pushed up, kissed right into the next expected resistance. Now we're getting our crossover and we're starting to sell off. I probably would have went ahead and faded that as well right there, right? So that was a good opportunity. The first tag of the 200 didn't come until all the way over here. So we're talking about, you know, nearly an hour or two later. They finally tagged the 200 as we get to the end of the day there. And you probably could have got yourself a nice little 5-10 point fade there. But what was the most critical level I mentioned yesterday for the bulls to defend? 50% of the previous day. And again, they came down right into it, actually held it nearly to the tick in multiple cases, but they did push through. And then we got this little bounce out. So they got as far as kind of our line in the sand, right, for the bullish bearish bias here, right around 50% of last week and 50% of the day before, and the bulls defended it. So we got some really good bearish clues up off of yesterday's high, the previous daily high, but the bulls defended the pullback to the 50%, and now you can see they're now back up, and now we're up just about testing 50% of yesterday now, right? So this is kind of the moment of truth for the bullish case this morning. We do want to see those bulls defend the 50% area, right? And obviously come back up. On the flip side, obviously staying down below 50% of the previous day here and staying below each successive roadmap level will be more clues that the bearish signals we're getting up off of yesterday's high are getting the follow through that we want to see. And then we can target down into the previous daily low, which basically is 50% of the previous day, or 50% of the previous week. And then we're down into these next areas. These would be targets to the downside